So we have direct cost. This means a cost that can be assigned to one single customer job. And in general, in our accounting systems, we don't just want to track the customer, we want to track the job. Okay, next up, indirect expenses. Notice we're calling them expenses instead of cost. That's because for job cost accounting, we want to make sure we only use the word cost when we're talking about direct things. So we have our indirect expenses. This is all the stuff that's needed to do projects for clients, but we can't assign it just to one client. If you think about a painter, there's the tarps they lay down, the cleaning supplies, trash bags, paper towels, all that kind of stuff. You can't necessarily assign that to one customer. And so that goes into your indirect expense group. And then we have overhead expenses. Overhead expenses are the things that most companies would have: telephone, rent, office supplies. So generally your overhead expenses should look like what other companies would have for overhead expenses: telephone, rent, office supplies. Also, your admin staff goes into overhead expenses. And then we have terms like markup and margin. We're going to learn how to calculate markup and margin and how they show up on the financial statement. The margin actually is supposed to end up matching your gross profit on your profit and loss. And we're going to learn why that is and why, if it doesn't match, what's going on. Some other terms, we have completed contract accounting. Completed contract accounting means that the income and costs associated with a project only show up on your profit and loss statement when the project is done. So everything is pushed onto the balance sheet every month, and then when the work is done, it's recognized. The one that's often used by the remodeling industry and the trades is work in progress, also called percentage completion or the WIP. That's when we're making monthly adjustments to push and pull money between the months so that we do what's called a matching principle. And we're going to be learning what the matching principle is. And then there's the labor burden. So the labor burden is allocating all of the burden associated with having workers do work for clients, and we allocate it via payroll as another level. So it's not PTB, payroll tax benefits, it's PTL, payroll tax labor burden. Labor burden includes many things, and you're going to be learning about that. So that's an overview of some of the terms.